Have you ever sat there, staring at a red screen, feeling your pulse spike while your brain screams for one more trade? You know the setup was bad. You know you shouldn't have clicked buy. But you did it anyway. And then, you did it again. That feeling, that sinking, heavy weight in your chest, is the silent killer of every trading career. Most traders think success is about indicators, patterns, or finding the perfect algorithm. They are dead wrong. Success in this game is purely about the architecture of your mind. We are here to dismantle the walls you've built around your own failure. Let's start with the anger. When you trade with anger, you aren't trading the market, you're trading your ego. You're fighting a monster that doesn't care about your rent, your stress, or your desire to be right. To stop trading with anger, you must first recognize the physiological trigger. Your palms sweat, your breathing becomes shallow, and the screen seems to blur. This is your fight or flight system hijacking your executive function. The moment you feel that heat in your neck, you have to walk away. Not tomorrow, not after one more trade. Right now. Anger is a signal that you are no longer objective. When you are angry, you are blind. You need to physically remove yourself from the desk. Go for a walk, splash water on your face, or just stare at a wall. You must break the neural loop that tells your brain that revenge is a valid strategy. Once the adrenaline fades, look at your charts again. You will see that the trade you were fighting for was never there. Anger makes you see patterns that don't exist. It turns a professional businessperson into a desperate gambler. Stop trying to win the fight and start trying to win the long game. The market is a cold, mathematical machine that operates on probabilities, not preferences. When you get angry, you are essentially trying to bully a hurricane. You wouldn't stand in the middle of a storm and scream at the wind to change direction, yet that is exactly what you do when you lash out at the charts after a loss. The emotional cycle of a beginner is a predictable tragedy. It starts with hope, the belief that this time, things will be different. You deposit your money, you feel the rush of potential, and then the inevitable loss hits. Then comes the denial. You tell yourself it was just bad luck. You increase your size to make it back faster. That's when the panic sets in. You see your account bleeding, and your mind fractures. You start making impulsive decisions, ignoring your rules, and trading purely on the hope that the market will reverse. Finally, there is the shame. You close your laptop, feeling like a failure. This cycle repeats until the account is empty. To break it, you have to accept that losses are not a reflection of your worth. They are just the cost of doing business, much like paying for electricity or rent. Think of a professional baseball player who strikes out. Does he throw his bat into the stands and quit the sport? No. He understands that hitting the ball 3 times out of 10 makes him an elite player. In trading, you don't even need to be right that often. You just need to manage your risk so that when you are wrong, the loss is small, and when you are right, the gain is significant. You need to stop making your identity dependent on a single candle. If you identify as a trader who never loses, the market will force you to face reality in the most painful way possible. The cycle stops when you stop needing the market to validate your ego. The market isn't a judge, it's a scoreboard. If you lose, it doesn't mean you are a bad person, it means your trade didn't work. Separate your self-worth from your P&L immediately. Now, let's talk about why you enter late. You see the move happening. The green candle is already shooting up. You feel that pull, that magnetic urge to jump in. You think, I can still catch the tail end of this. You click, and the market instantly reverses. Why? Because you are chasing liquidity, not value. By the time you enter, the smart money is already taking profit. You are the exit liquidity for the professionals. You are entering late because you are afraid of missing out, but you are actually just reacting to the noise. You need to learn that if you missed the train, the station is closed. Wait for the next one. Patience is the greatest edge a trader can have. Most of your losses come from trades you were never supposed to take in the first place. FOMO, the fear of missing out, is the siren song of the retail trader. It feels like opportunity, but it's actually anxiety masked as ambition. When you feel that surge of FOMO, ask yourself, am I entering because my strategy says so, or because I'm bored and want to feel involved? If the answer is the latter, you are already losing. FOMO is a symptom of a lack of purpose. When you have a clear trading plan, you don't need to chase moves. You wait for the move to come to you. You wait for the structure, the confirmation, and the edge. If the market doesn't provide it, you don't trade. That is the definition of discipline. Think of a sniper. He doesn't fire wildly into the forest hoping to hit a target. He waits for hours, often in uncomfortable conditions, for the exact moment the target aligns with his sights. He doesn't care if the target moves around, he only cares about the shot he is prepared to take. FOMO is a thief that steals your capital and your confidence. Starve it by sticking to your plan. If you find yourself constantly bored, take up a hobby that doesn't involve your trading account. Play chess, go to the gym, learn a language. Do not use your capital to alleviate your boredom. Accepting a loss is the hardest thing you will ever do. Most people treat a loss like a personal injury. They get defensive, they get stubborn, and they hold on to a losing position because it has to come back. This is psychological suicide. You have to detach. A loss is just data. It tells you that your hypothesis was wrong or that the market environment has shifted. When you take a loss, say to yourself, I am following my risk management rules. That is a win. You preserved your capital. You live to trade another day. If you can't accept a loss, you can't make money. It's that simple. The market doesn't care about your opinion. It doesn't care if you're right. It only cares about price action. When you stop fearing the loss, you stop acting in fear. Revenge trading is the final stage of a crumbling mind. It's when you lose a trade and decide, I'm going to make the market pay for this. This is the quickest way to blow up an account. You aren't fighting the market, you are fighting your own inability to lose. Every time you try to get even, you lose more. It's a downward spiral that ends in ruin. The market is not a person. It is not out to get you. It is a vast, impersonal force, a collective representation of millions of participants. Seeking revenge against a force of nature is madness. The only way to win is to walk away when the pain becomes too much. You have to be stronger than your own desire for vengeance. Consider the historical context of markets. They have been crashing, rallying, and moving sideways for centuries. Your personal loss is a drop in the ocean. It doesn't matter to the market. It shouldn't matter to you, either. Calmness during volatility is a superpower. When the market moves fast, most people freeze or panic. They see the red and green flashes and their brain goes into survival mode. You must train yourself to see volatility as an opportunity, not a threat. Use smaller position sizes if you need to. Focus on the levels, not the P&L. When you look at the dollar amount, you get emotional. When you look at the chart, you stay analytical. Keep your eyes on the structure. If the market is too volatile for your nervous system, turn off the screen. There is no shame in sitting on your hands. Real traders know when to stay away. The adrenaline addiction is real. Many traders are actually addicted to the high of the volatility, not the profit. They want the feeling of being in the game. They want the heart-pounding intensity. If this is you, you aren't trading, you're gambling. You need to find a way to get your dopamine elsewhere. Exercise, read, learn a skill. Don't look for excitement in the markets. Markets should be boring. If your trading is exciting, you're doing it wrong. Professional trading is a quiet, methodical process of executing a plan. It's not a movie, it's a job. Treat it like one. Imagine a surgeon. You don't want a surgeon who is seeking excitement while they are operating on your heart. You want someone who is calm, focused, and follows their training exactly. Trading is the same. The boring, repetitive execution of a proven system is how you build wealth over time. If you want a rush, go bungee jumping. Do not seek it in your brokerage account. Giving back your profit is a classic rookie mistake. You have a great morning, you're up 2% on your account, and you feel invincible. So you take one more trade. And then another. Suddenly, you're back to break even, or worse, you're down. You have to learn to lock the door. Once you reach your daily goal, you stop. You close the platform. You go do something else. The market will be there tomorrow. There is no prize for trading all day. The only prize is keeping what you earned. If you can't stop, you have a discipline problem, not a strategy problem. The overtrading trap is often fed by a sense of greed. You think, if I made 2% in an hour, I can make 10% in a day. But the market environment shifts. The volatility that gave you the 2% profit might have evaporated, leaving you in a chop zone that eats your gains. You are not a machine that can run indefinitely. You have limited focus and limited mental energy. Every decision you make consumes cognitive resources. After a certain point, your decision-making quality degrades significantly. This is known as decision fatigue. By trading all day, you are essentially asking your brain to perform at peak capacity while it is running on empty. Stop while you are ahead. Protect your capital with the same intensity you used to acquire it. Finally, the feeling of "I need to recover" is the most dangerous thought you can have. It implies that you are in a deficit that must be filled immediately. It creates a sense of urgency that forces you to make bad decisions. You don't need to recover today. You have years of trading ahead of you. One bad day is not the end of your career. But trying to fix it in 1 hour? That can be. Give yourself permission to be down for the day. Take the hit, analyze what went wrong, and come back fresh tomorrow. You cannot force the market to pay you. You can only put yourself in a position to be paid when the opportunity arises. You are in control of your actions, but you are not in control of the outcome. Focus on the process. Focus on your rules. Focus on your mindset. If you can control your mind, you can control your results. Master your psychology or the market will master you. Remember, the market is a mirror. It reflects your own discipline, your own patience, and your own fears back at you. If you don't like what you see in your performance, don't blame the market. Look in the mirror, adjust your internal settings, and commit to the long-term journey. The path to consistent profitability is not paved with clever tricks, but with the consistent, boring, and disciplined application of a proven edge. It's a marathon, not a sprint. Every day you survive is a victory. Every day you follow your rules is a success. Keep your head down, keep your risk small, and keep your ego out of the game. That is how you win. That is how you survive. That is how you become a trader.